Joining me now for a deeper dive is Christine Short. She's head of research at Wall Street Horizon. Christine, welcome.
Thank you so much for having me.
A lot
Big
to
week,
talk about,
yes.
as always. That's exactly right. So let's start off with what is on tap this week. What can you tell us?
Yeah, big first peak week of the season. Actually, it always comes a little later in Q1 just because of the holidays, and we're coming off of the New Year. And so from now to the end of February, we're going to see the biggest chunk of S&P 500 companies reporting. The two big ones this week, as you know, Alphabet and Amazon. We're kind of rounding out what some of the Mag 7 companies started last week, and we always kind of close it up with NVIDIA, which is not out until February 26th. But again, a lot to talk about with DeepSeek, emerging early last week, which actually didn't seem to impact many of those names as much as we thought, right? Investors saw it actually as a good thing, right? Cheaper generative AI is good for all. It brings down costs. Let's forget about what these companies have spent. Those are sunk costs now, and let's look forward at, this is technology that can be used more cheaply, more efficiently. So I think you're going to see that in the Google commentary, the Amazon commentary this week. You'll want to hear an update on AI out of Google. Revenues expected to be up EPS 30% year-over-year, revenues 12%. A lot of that has to do with Google Cloud Computing, still very strong, but also you're going to want to hear about AI spending. And a few Wall Street analysts actually said that Google, Alphabet should benefit the most from this DeepSeek emergence because it will sort of raise the urgency on product development. Now everyone's like, we got to get out there, we have to match that, and we can do it.
Interesting. So, of course, these results, Christine, two of the Mag 7, at least, following what were four reports from major tech companies last week: Meta, Microsoft, Apple, and Tesla. What were the takeaways there?
It was a pretty strong reporting season, I will say, with the exception of, I think Microsoft kind of got unfairly dinged a little bit. They did beat on the top and the bottom line, but once again this quarter it's the softer revenue guidance that investors didn't like. But again, I think they're one of the names that's going to benefit from this DeepSeek emergence. Tesla's sort of a different story. They missed once again on the top and the bottom line. I think investors just really believe Elon Musk's ties to President Trump will help his industry, will help bring down, make policies a little easier and bring down any sort of regulation on EVs. Meta did great again last quarter they had a little bit of a cooler user growth number, and investors weren't so happy about that. But this quarter, they posted revenue growth of 21%. They kept their AI spending plan, which I think was positive, right? They said they're going to be spending about 60 to 65 billion this year, and that they believe Meta AI will reach 1 billion users in 2025. So investors really seem to like that. And then Apple, yes, iPhone sales have been down, weaker in China, but investors didn't really grab onto that as much as they did this. That was expected, that was sort of priced in, but revenues were up 4%, and they guided for low to mid-single-digit revenue growth for next quarter, and I think investors were pleased with that.
Now, I'm curious, Christine, I know you follow this so closely, what we hear from these executives on the earnings call.
Yes.
What are we finding that's top of mind for them?
Yeah, I think it's been a little more upbeat. The end of last year, we heard a lot of cautious commentary. The banks always kick it off, so they tend to sort of set the tone. And we actually heard from David Schwimmer at Goldman Sachs. They actually felt that CEOs were more upbeat. They said some of this was likely due to President Trump getting in as the U.S. president, but they felt like CEO confidence was higher. We track that through our late earnings report index, our proprietary metric that tracks companies that delay or advance earnings reports, which can be, academic research shows if you delay an earnings report, it comes with bad news on the call. And that's actually been below benchmark this season, which is positive. It means companies are less uncertain than they were the last several quarters. And so we are seeing a little bit of that. But now with what's happened over the weekend with tariffs, with more certainty and clarity, I think we'll see more commentary on that. Not that we haven't, but it wasn't as clear as it is now. They have been imposed. Before it was just if and when and if Trump gets in. And so there were plans being put together, but it was unclear if they would have to use them. And so I'm interested to see how those reporting from this point on are going to talk about those.
And I would suspect that we would hear from a lot of analysts wanting to know from companies across various sectors what this impact might be, because I think heading into this weekend, the expectation is it might be a negotiating tactic, not necessarily a literal imposition.
Yes, it's interesting how after the inauguration there was almost this optimism because they weren't mentioned. There was this optimism, as you're saying, that they weren't actually going to happen. It was just, during the campaign messaging, and was it going to be a literal thing? And so I think that's why you're seeing markets react the way they are now, because they had this optimism around them possibly not happening. And then also, unlike the tariffs he imposed in his last term, this is not a phase-in. This is an immediate. There's no chance to sort of catch up and phase these in. It's happening right now. And so I think that's why you're seeing markets react the way they are today.
Quickly, Christine, before I have to let you go in just about 30 seconds, anything else we should know about this earnings season?
I think investors have been a lot more forgiving. The last few quarters we've said companies that are beating estimates are getting rewarded less than usual, and those that miss are really getting punished more than usual. We haven't seen that. We've actually seen, if one metric is off, investors are still, buying into that, and you'll see the stock pop. And so that is one thing that we've seen. And like I said, overall confidence seems to be a little bit higher. You're seeing companies beat by a higher percentage. So you mentioned at the top, 77% of companies have beat. They've beat by an average of 5%. I think that gives us enough leverage to get to those lofty estimates that analysts are expecting for the back half of the year.
Christine Short, head of research at Wall Street Horizon, always with a bevy of knowledge and stats. Christine, thank you as always.
Thank you for having me.